Ladies and gentlemen, good day and welcome to the Repono Limited H1 FY26 earnings conference call hosted by Kiran Advisors Private Limited. As a reminder, all participant lines will remain in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Ms. Saki Panjiara from Kiran Advisors Private Limited for opening remarks. Thank you, and over to you, Saki.
Good afternoon, everyone. On the behalf of Kiran Advisors, I welcome you all to the conference call of Repono Limited. From management team, we have Mr. Divyesh Deepak, Managing Director, Repono Limited. Now, I hand over the call to Mr. Divyesh Deepak for the opening remarks. Over to you, sir.
Thank you, Shari. Good afternoon, everyone, and thank you for joining the call today. It really means a lot. Excuse me, my voice is a little down. It really means a lot to us, especially because this is our first earning call after our public listing on the BSE platform in the month of August 2025. Before we get into the performance highlight, I would like to briefly introduce who we are, especially for those who are connecting with us for the first time. Repono is a specialized service provider offering 360-degree warehousing and oil terminaling, liquid terminaling solutions to Indian oil and gas and petrochemical industries. And now we are expanding our business into chemical ecosystem. Our services cover consultancy, engineering, operations, maintenance, and a wide spectrum of value-added solutions for both public and private sector companies. We manage critical assets across the oil value chain, that is including crude oil, ethanol, petrochemical, lube oil blending facilities, specialty chemicals, petrol, diesel, ATF, products handling, and including one of the most advanced polymer packaging lines. We are proud to be associated with some of India's leading players, including public sector undertakings, who are working with us for the last 6 or 7 years with us. Since inception, our journey has been shaped by deep domain expertise, operational discipline, and our commitment to being a reliable partner in environments where precision, safety, efficiency matters every single day. From managing one of Asia's largest lube oil plant, now expanding our footprints into chemical logistics and terminal operations, we have always believed that execution excellence is what builds long-term relationship, and that continues to be our core philosophy going forward. Over the last few years, we have been steadily evolved from being a warehousing and operational support provider to becoming a comprehensive solution partner for integrated O&M, that is operations and maintenance and logistics support. The trust we continue to receive from our blue chip clients reinforce our belief that we are building the company in the right direction, with the right mindset and at the right scale. Our entry into the listed ecosystem is not just a milestone, but a new chapter that opens doors for growth, higher governance, and long-term value creation. Now, let me talk to you about the financial performance for the H1 this year. Our standalone revenue stood at 30.72 crores, reflecting a strong year-on-year growth of approximately 37%. EBITDA for the period came in at 5.48 crores, growing by 27% year-on-year, and profit reached 3.23 crore, up by 22.75% compared to the same period last year. These numbers reflect not only consistent operational execution, but also the strength of our long duration contracts, diversification across service line, and deeper deeper integration with existing marquee clients. The addition of multiple contracts during the period, including work with Deepak Phenolics and new assignment across the tank farm management and material handling, further broaden further our operational base and provide clear revenue visibility. Today, we have an order book which is crossing 240 crore, which gives us the comfort and confidence as we look ahead for the coming future. I also want to take a moment to appreciate our team. A business like ours is built on the execution on the ground every day, whether it is safety compliance, plant operations, logistics, dispatch management, or technical processes handling. Our people remain the engine of the organization. The culture we are building is rooted in ownership, operational excellence, and service quality, and we intend to strengthen that as we scale up. Looking ahead, we remain optimistic. The demand for integrated O&M and specialized handling services continues to expand as industry capacity grows and companies prioritize safety and efficiency. Our goal is to build responsibly, expand both depth and breadth of the capability, and strengthen our position across the oil, petrochemical, and chemical value chain. With our asset-light approach, experienced leadership team, and expanding client base, we believe the foundation for the next phase of growth is firmly in place. With this, once again, I thank all of you for joining us today and for the confidence placed in Repono. We look forward to engaging with you more closely as we continue this exciting journey ahead. Thank you very much, and we are open for further calls.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, if you wish to ask a question, please press star and 1. We take the first question from the line of Mukesh Panjwani from WC Securities. Please go ahead.
Yeah, hi sir. Am I audible?
Yeah, Mukesh, we can hear you.
Yeah. My first question is regarding the order book we have of around 240 crores. So what is the execution timeline of the same?
Yeah, so it will end the last order that would end is 35 months from now. So you can say that, whatever orders we have, it is the visibility is within 36 months.
Okay, but
so,
out of this 240 crores, how much would be executed in next 1 year?
Yeah, so next 1 year, you can safely say it would be 60 crores, 60 to 70 crores should come in next 1 year. And then it increases to about same proportion about. So these are the existing ones. We have not added anything new or what we believe that can come. These are the orders that we already are in hand and we are already executing it.
Mm-hmm.
Yeah.
Okay, so this 240 crores doesn't include the orders we are right now executing. Am I correct?
No. So 240 includes, as on date, we are sitting in November. So from December onwards, till 36 months or 35 months, we have 240 crores orders to be executed, which we are already part of it, which we are already executing it.
Got it.
These are not the new orders. These are all the orders which are in hand and under execution, and the balance amount that we have to deliver is 240 crores.
Okay. Got it. Got it. And recently we acquired a company for, I think, 1 crore. So what is the purpose of motive of acquiring this company? Because it has no revenue right now, I believe.
Okay. So the company, sir, we have not acquired any new company. It was within the ownership. This company we are expecting a huge order, which surely we cannot right now divulge more details about it. This will be named as Repono Terminals Private Limited. So this company was in our fold only. We renamed it, this company. And a massive project is expected within 1.5 months. That will come. That will be really huge, and that project will be executed under this company. It will be right now. It is 100% owned by Repono.
Got it.
Yeah.
And sir, can you throw some light on the bidding pipeline we have right now?
So like every month we are bidding about 3 to 4 projects are there that we are bidding. There are about 10 contracts. 10 bids are in the various stages of evaluation. So you can say that at any given point of time we have 30 to 40 crores worth of tenders are under evaluation.
Okay. And then, sir, in H2, can we expect some margin improvement?
Margin improvement, yes, surely there will be some margin improvements because first H1 of this year was little, I would say, because there was a lot of cost involved, much more cost involved into the first quarter. The first part of the year. Expenses related to we came to the markets and all that, lot of travels, lot of engagements and all that is there. So that is all taken care of. And operationally, I see we continue the same numbers. But yes, overall, you can see the margins to be improved.
Okay. And in H2, can we expect some improvement in the top line also?
Yeah. So we are, last year we did 51. This year we are already crossed 31. 31. We are there. Our expectation is at least I would say 60 at least. And typically our H2 have been 60% of the. That's the journey that we have. 60-65% of the H1. If I stretch that, then probably we will be crossing 65-66 cross.
Okay. Got it.
Yeah.
Okay, sir. That's all from my side. I'll come back in a few. Thank you.
Thank you, Mukesh.
Thank you. We take the next question from the line of Sahil Hyderabadwala from Globis Fund. Please go ahead.
Sir, can you hear me?
Yes, we can hear you.
Thank you for the opportunity and congrats on the good set of numbers. The first question I need to ask, when we provide these O&M services, so what are our contract periods or what are our terms, how we get revenue, like it is a percentage of the project price or anything you can share about, and what are the contract periods of this O&M?
So on an average, it is between 3 to 5 years. Each contract life is about 3 to 5 years because majority of our customer base comes from companies like ONGC, IOCL, HPCL, Mittal. These are all government undertaking. So 3 to 5 years. And if there are some private companies that we serve, like Deepak Phenolics, like Epsilon and all, these companies that we continue to every 2 years, every 3 years, they have negotiation and that it increases. So we have a good track record wherever there is a private company we have engaged with them. They have not left us since beginning. However, in terms of the PSUs, wherever we are working, it is bound that if it is a 3 years contract, they have to come out with the tender again. Or if it's a 5 years, they have to come out with a tender again. So we participate again. Sometimes we win, sometimes we lose. And we have lost a couple of times. But there also our track record is good. But yeah, so to answer your question, 3 to 5 years. And typically these are on the basis of, on the throughput basis in terms of how much liters, how much kiloliters of petrol, diesel, or a polymer packaging done on a per KL basis or per ton basis. It is decided, and also there is a minimum guarantee. So, say just in case some plant shuts down for their own reason, but we have deployed people, we have our resources there. So we do get the minimum payment done irrespective of work or not. So that way our basic margins, cost and reasonable margin is protected. Did I answer?
Any numbers on that, like minimum guarantee in what, like percentage of something?
So yeah. So minimum guarantee is the percentage of the overall contract value. And it depends on the places. It starts from 80 and it goes as high as 95% guarantee, depending on the customer, depending on the products. But minimum, I would say one place is minimum at what we are at there is about 80%.
Okay, sir. And second question was on the off-site and on-site revenue contribution for the H1. And are there any margins difference between both business models? And what are our plans to increase the off-site revenue?
Excuse me. Yeah, so off-site margins are generally better than the on-site, and also depending on the what kind of product that we are handling. Some of the products that we handle is carbon black also, where the on-site margins are much better than the off-site margins. So it depends on which product we are handling, what kind of, whether it is a hazardous chemicals we are handling, whether it is on-site, if it is on-site, then the margins are much higher than the off-site commodity that we are storing. But in general, same products if we handle, then off-site gives you a better margin. And therefore, it is now we have all in discussion to expand our warehousing off-site footprint. Right now, we are based at Mundra and Bhiwandi. Shortly, we will be increasing our capacity at these both locations, and also we will be adding some new locations.
Okay, sir. And one last question, sir, on the financial front. There was an increase of other non-current assets in H1 of around 13 CR. And the CFO is primarily negative due to this reason only. So what is included in the other current assets, if you can throw some light on that?
So this other current assets is nothing but advances given for the...
No, sir. Other non-current assets.
Sorry?
Other non-current assets.
Other non-current assets. One second. So that's something, it is advance what we have given for the equipment, what we are going to get it.
Okay, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. We take the next question from the line of Jignesh from Jiva Capital. Please go ahead.
Yeah, so to understand from the lot of activity happening on the ports front in Maharashtra, Vadhavan port is going to be developed. So, any plans of you entering the new project where you provide your services or manage terminals?
No, as of now, no. I mean, our thing is that we do not work independently until and unless one of our customer demands us to set up some warehousing or some facilities at a particular location, we do it. We do not go independent at any new ports and all. However, having said that, like I told you, Mundra we are expanding because one of our customer, one of the large player in Mundra, they want to expand the warehousing capacity. We will expand. Same customer is also looking at a packaging facility at JNPT, not at Vadhavan. But we are studying it closely if there is an opportunity to do it. So generally our philosophy is that we piggy ride on the customer. And if you look at the list of our customers, they are like amongst the top, all the top oil, petrochemical, gas companies are there we are serving. And all of them are expanding and growing. And we are well entrenched with them. So as and when and wherever they are growing, we set up our shop close to them and serve them from there. So independently, no. But looking at the new port, yes, we are studying Vadhavan. We are studying one of the port that is coming up in Kerala. We are in discussion for a location there in Gopalpur on seaport for managing some of the some ammonia. People were talking about that can we set up something for ammonia. So yes, again, there are existing customers who are taking us to different locations. But yeah, independently, no.
Okay. So, in the previous question, you mentioned that you are acquired a company and renamed Repono Terminals Private Limited. So, just wanted to get an understanding what business it will do going forward.
Okay. So we are expecting, I cannot divulge more at this stage, but we are expecting a large oil terminal project coming into it. And we are very, I would say, last stages of final negotiation with one of the largest customers, industries in India. And because it will be some investment, asset investment would be required. So we wanted to do it into a separate SPV. So this is right now 100% owned by Repono. The new business, which hopefully we should get in before the end of this year. I mean, before the end of December, month of December. We should get it, and that business will be dealt under that company, which anyway Repono will be owner or part owner of that SPV.
Okay, so to going on a strategic aspect, as of now there are very few assets that you have deployed. So in this particular company, you will have to deploy a particular amount of capital since it's going to be a big government project. So any fundraise expected?
Sorry, I didn't get. What is it? Any?
No, so if we are going into some a new kind of business where you will require a big amount of capital, so any fundraising expected by Repono? Or it will be taken care from the cash accruals itself?
No. So it will require both. Of course, some cash accruals that we have that we will put, and of course we have to raise debt, and also probably we have to look into for some equity for this project. It will be a massive project, quite a landmark project, I would say. But yes. Right now, it is either 1 or 0, to be very honest. So, this is how negotiation goes. If it comes, then it is 100% with us. If it's not, then, yeah. So, therefore, I mean, not... so, we're just keeping our fingers crossed at the moment.
Okay.
Yeah.
Thank you.
Thank you.
Thank you. We take the next question from the line of Dhanraj Tolani from Kuber Investment Advisors. Please go ahead. Dhanraj, please unmute your line and proceed with your question. Since there is no response, we will move on to the next question, which is from the line of Ishita Said from Urban Sphere Consultant. Please go ahead.
Hello, am I audible?
Yes, ma'am. We can hear you.
So my first question would be like, what percentage of your business today is long duration annuity style versus annually reviewed contracts?
Ma'am, we don't have any contract which is annually reviewed. So most of our contracts are either 3 years or some of them are 5 years. So like the couple of that private ones where the contract period ended like 3 years was the contract, and after that they didn't float the tender. So after negotiation and extended for another 2 years, another 1 year, another. So this is how it works. But otherwise, most of our contracts are either 3 or 5 years.
Okay, so like employee expenses have increased significantly. Is this linked to new contract mobilization or structural capability building?
So the employee expenses has increased by 10%. It is a regular increment done in the year, that is in the April. So the cost has from 30% to 40% of the overall revenue. That is what the increase is. So
Okay.
it is a regular increment in the employee cost.
Oh, okay. So like, where do you see remaining leadership or capability gaps that need strengthening?
Can you repeat your question, ma'am?
Where do you see remaining leadership or capability gaps that need strengthening?
Ma'am, so just to, if you know our background, the ownership and the top management team, we are all of us, I can say most of us have spent last 25 to 30 years in Indian and international oil, gas and petrochemical companies. So I can safely say that the top management what we had here is one of the most experienced into this field. We were working earlier in some of these companies like ONGC, Reliance and other places, likewise companies. And then Divyendu, Deepak and Sankal Bhattacharya, they decided to leave and then start their own company. So, so the leadership and then that all the top management, that head of our liquid, head of our solids, head of our safety, our CFO, we all come from the similar background for more than 25, 30 years of experience. As the philosophy of the way we work is, as we expand and we are chartering into a new product addition, new product lines in terms of handing of the product, we do hire people to specific to the domain. However, we keep normal 5 to 7% extra manpower, so that you see that every 3 months or every 4 months we get a new contract. That has been our track record for last at least couple of years. Now to get to any new project and then start hiring people from outside, it is very difficult to pass on your own philosophies, to your own safety values, your own culture, your own ethics value to the new management, to the new people. So what we do is that from our existing systems, existing places, that 5 to 7% extra manpower, we transfer it to the new location. Like recently, we started about few days back. We started in Assam. That is Oil India project. For the first time, we got into the upstream, doing the operations and maintenance of oil field liquid injection for the economic or enhanced oil recovery. Something new. Very few people are into it. But then we could mobilize it superbly and seamlessly because we could. So there were 60 people required. We could transfer our 22 people, and rest we could hire from outside and mobilize it. Now again we are on a hiring spree at various locations that we will hire. So as a philosophy, we put 5 to 7% higher at the lower level, with engineers and below. And top management, I think we are sufficiently good for to, even if we have to 3 times, 4 times we grow, I don't think we need to add anyone at the top.
Okay. So like beyond manpower efficiencies, what other initiatives are underway to structurally lower operating cost?
So we already embarked, I think the last question we said that, we are buying out some assets. The assets like forklifts, MHEs, that are, we were buying, we were taking on lease on monthly basis. We are in process of buying those machines. Some of the machines have arrived, some will arrive. The moment these machines arrive, I mean, the overall cost will come down. And similarly, we are looking at more facilities where, like our Mundra asset or our Bhiwandi assets and all that we have. But we are looking at how to further maximize. Can we add a racking system there so that the throughput can be enhanced, can be increased. Also, just to add, we got a couple of new businesses this year. I think this quarter only, for doing the engineering, complete detail engineering for one of the large warehousing infrastructure company, which our team is engaged into developing their complete industrial park, warehousing park, which we never got into. We would do part of it earlier. We would do some warehousing design, warehouse engineering, but now we are developing the complete industrial park, including warehousing into it. So we are trying to remain into the same field, however, trying to maximize with the resources that is at our command to get into new businesses, more revenues for us.
Okay, sir. Like, thank you for answering my questions.
Thank you, ma'am. Thank you.
Thank you. We take the next question from the line of Mahesh Seth from BY Capital Management Company Limited. Please go ahead. Mahesh, please unmute your line and proceed with your question. Since there is no response, we will move on to the next question, which is from the line of Dhanraj Tolani from Kuber Investment Advisors. Please go ahead.
Very high. Yeah, please go ahead, Dhanraj. No, we can't hear.
Dhanraj, please unmute your line and proceed with your question. Since there is no response, we will move on to our next question, which is from the line of Ishita Nagar, who is an individual investor. Please go ahead. Ishita, please unmute your line and proceed with your question. Since there is no response, we'll move on to the next question, which is from the line of Aditi Roy from Patel Advisors Private Limited. Please go ahead. Aditi, please unmute your line and proceed with your question. Aditi, are you there? Since there is no response, we'll move on to the next question, which is from the line of Vinod Shah from VS Ventures Private Limited. Please go ahead.
Hello.
Yes, Vinod, please go ahead.
Am I audible?
Yeah, Vinodji, boliye.
Okay. Yes, sir. So we currently have a presence in 6 states. So which new states or cluster we are prioritizing for the expansion?
So, new state, I don't see new state coming in here because state-wise, these are the states where we are, there itself we are expanding, like Gujarat we will expanding, Karnataka we are expanding, Maharashtra we are expanding. New state, we are in discussion at Odisha for Gopalpur at sea in discussion with one of our major clients there. So Odisha could be a possible new state in next 2 to 3 months. But yeah, any new sector per se, a new state, we don't see. However, we are setting up a company. We setting up a company in Saudi Arabia. So we have found a very good partner there, and where Repono will be the majority shareholder, and they will be the minority one. And we have had 2 rounds of discussion with some of the potential customers, and we are very, very hopeful that that before March 31st, we should be into one business at least there in Saudi Arabia. Yeah.
Okay. And how much capital infusion that would require?
So it is more of the O&M. There's no investment required. So only the working capital requirement would be there.
Okay. And so you had mentioned like expanding into fertilizer, cement. So when do you expect these verticals to contribute meaningfully?
So fertilizer, we have not made any significant move. But cement, we are in discussion with 2-3 companies, all owned by Adani. Adani Cement has come up with the philosophy that they would like to outsource their entire cement crushing unit and plant, especially the packaging, the logistics area, to a third party. We have already submitted our proposals at 3 places. The negotiations are on. Hopefully, so if we get that, then yes, we can also start ourselves in Haryana. So that will be the new state that we can be added. But yes, so you might see cement coming in shortly into our fold.
Okay, sir. And sir, we have we are dealing with PSU and large institutional clients. So how flexible or constrained our pricing is?
No, see, you have to be competitive. There is no, because eventually it is given on L1 basis. The only thing is that, because some of the products that we handle, so those tenders, not many people qualify. So therefore, the margins are not really squeezed to that extent. But then again, even if there are 4 or 5 people competing, you have to be really competitive. So if that answers your question, to meet the compliances, we are good enough to meet the standards. But as a company, we always need more margins, more money out of the customer. But then these are all competitive bidding. So yeah, there is a restriction. Yeah.
Okay, sir. Thank you so much for that.
Thank you.
Thank you. We take the next question from the line of Dhanraj Tolani from Kuber Investment Advisors. Please go ahead.
Yes. Thank you, sir. So I have a couple of questions. I'll start with the first one. I just wanted to know on the revenue growth part. So we have seen a good growth in H1 FY26. So how confident are we maintaining this momentum over the next few quarters?
So no, we are very confident. Next few quarters is not a challenge for us at all. I think I mentioned that we are already sitting pretty on the order base of 240 crores. If you simply extrapolate itself, that give you the basic growth that we are looking at, even if we don't add any new business and all that, which is not going to be. So our challenge is not the next few quarters or say a couple of years, that we are really looking at to expand big. And we are in discussion with some of the customers where the order size can be really large. But yeah, still part under discussion.
Okay. And also, wanted to know the share of revenue that major of the revenue is coming from few large clients. So how do we plan to diversify this clientele base?
I mean, we are meeting more and more customers. But unfortunately, the segment where we are in, oil, gas, chemical, petrochemical and all, they are in overall, if you look at, there are about 10, 12 customers or 15 customers who are the main. And if there are 15 customers, we are already serving 10 of them, 10 or 11 of them, we are already serving them. So the offsite, the target is that our offsite operations, which is in Mundra, Bhiwandi now, and as we grow, there we can find more and more players who are relatively smaller in size, but decent volumes, and also that will come from there. So there is a conscious effort to expand the customer base, expand the geography, expand the product where we are in. So if I have to track for last 1 year, the few new projects that we have added, lube, we were not there, we are in lube. Handling, world's second largest lube oil plant at Chennai. And that is also giving us some traction into the people are coming to us, and we are already in discussion with some parties for the lube oil O&M, plant O&M. So that's new product. During my last response, I said we started enhanced oil recovery, that is a water injection. That is a oil upstream that we have just started at Assam, Oil India, which is new, entirely opened a new chapter for us to explore. So, and I also talked about the Saudi market that we are looking at. So we are conscious of the fact that most of the majority of our revenue come from these 5 or 7 customers, but these 5 and 7 customers in itself, they are like IOCL, then the ONGCs and HPCL, and also they're pretty solid foundation they have, and they're all, not only they are big, but they are also growing much faster than any private enterprises. Like ONGC announced huge amount of expansion, so is HPCL, so is BPCL. So the majority of the oil, gas, chemical expansion in India is actually coming from the PSUs and less by the private players. And fortunately, we are well entrenched in both private and the PSU, but more into the PSU domain. Yeah.
So, over the next few years, what would be our preferred focus? It would be debt reduction, aggressive reinvestment, or more acquisitions, or paying dividends. So, what would be our preferred focus?
Focus is definitely on the bottom line, boss. Let's get it clear. We are here to make money. We are here to enhance value. But we also understand that the kind of business and the competition that we are facing, unless the top line is expanded, the bottom line becomes difficult to maintain. And therefore, our urgency to find a newer market, our urgency to get into the new products, doing consulting work, which is really to the bottom line, is primarily focused only on the bottom line enhancement. There are projects, mind you, that we can get and increase the bottom line to large extent. But then the margins that you come down to 1%, 2%, those kind of businesses we are not interested. So many of the places where we bid, we are L3, L4 and all that, because we could not match the expectation or our competition. So we are choosy. We try to look into where the margin lies. But yes, the focus remains bottom line, and for that you need new products, new geographies. That's how we look into it.
So are we building any proprietary logistics tech or integrated solution with the global platforms?
Yeah. So One which I just shared, that Repono terminals, that would be one of such projects. So at this moment, will not be able to divulge. Anyway, the answer would come within I would say next 30 to 45 days. If we are in, then if we are heading for a really high jump. If not, then whatever steady growth we are maintaining, that will continue to maintain.
And also specifically for existing key customers, so how much of the share of their logistics and O&M spend do we currently serve, and how much headrooms exist?
See, if you look at, we are only focused into the managing the packaging, warehousing, oil terminaling assets and all. We have not got into any transportation or anything. So it is very difficult for me to give you a percentage number of their entire logistics, how much part we are serving. But yes, so give you an example, say IOCL. IOCL, they are serving, if they are having more than 100 terminals all over India. We are serving only one. So there is 99 more available as and when they decide to go for a third party outsourcing, which they are gradually doing it. At least 7-8 of them, I think more than that, they would have already done it, and they plan to completely send it on an outsourced model. So we are well into the system, already serving them. As and when these opportunities are there, we have the requisite qualification. Then I think these are the market that will open up for us coming future.
And as a B2B industry partner, do we think how important are brand visibility, and how do we measure our brand visibility impact?
See, I would say that for a company who is just 7-year-old and rubbing shoulders in terms of competing with some of the giants of the industry, I think we are reasonably well placed. Sometimes I feel that we are fighting those really big ones and competing with these big ones into most of our tenders and all, which are far bigger than us. Sometimes we win, sometimes they win, but that's part of the game. But I would say in 7 years' time, we have been able to establish ourselves as a reliable and ethical solution provider. That I can assure you. Not even one place. There are so many contracts that we would have done that our contract have been short closed, or we had any safety concern that we had. Nothing whatsoever, which is very important in this industry. And I think most of the customers, they do know us. We know definitely our customers. Yeah, so I think in short span of time, we have been able to come out really good in the market in terms of brand. People clearly know us. Yeah, more can be done. Yes, definitely more can be done. More expenditures can be done to show our brand presence. But I think let's see. Like I said, next 2 months will be really crucial. If we hit this project, and itself will be a big name in the industry. Yeah.
And as you said, we are focusing on the margin part, and we are planning, we planning up to increase the margin, or we are planning up the bottom line. So are we focusing on the to increase our geographical presence, which will definitely increase our revenue scalability? So what is the plan for the geographical presence increase?
So if you look at, we are present almost all those states which are really growing fast. So we are in Gujarat. We have already four sites we are working in Gujarat. Couple of sites that we have in Maharashtra. Then we are present in Tamil Nadu. We are there in Karnataka. And right now, Assam is expanding, so we are present in. So our is mostly driven by the client wherever there are refineries, wherever there are petrochemical complexes, and fortunately they are into the most developed states that we have. वहाँ पे वो लोग हैं, and then we are already present there. Like I said, we don't look into a new area and let's go and set up a shop and then wait for business. If our customer says, like one of our customers is taking us to Odisha, said, okay, you set up a facility there, we will be, parking our material and all that, then we are happy to go to Odisha. But what we generally do is we do not just go and set up a shop and then wait for business. If we have the visibility, if we have the customer there, then only we go and invest time and money and then the new geographies. So one such initiative is being done at Saudi Arabia, where we see a lot of traction for companies like us. A lot. In fact, we met some of the customers. They were really excited that kind of services that we provide that can be provided there. So, but the first step is you have to have an entity there. So right now, entity is under formation, and hopefully, I'm very, very hopeful that before 31st of March, we should have one business coming there in Saudi.
Got it. Thank you, sir. That's all from our side.
Thank you.
Thank you. We take the next question from the line of Sahil Hyderabadwala from Grubis Fund. Please go ahead.
Hello.
Yes, Sahil, go ahead.
Opportunity again. Sir, I have just one question on the order book front. Like in the last call, I don't remember what it would be, but you have given a number of order book in discussion of around 600 to 700 crores, and were expecting a conversion rate of 15 to 20% for the new orders. So, are there any updates on that front?
I think that's what I think I mentioned that I don't remember 500 or 600 crore we ever said that. But yes, the point we are so there are two numbers. One is what we already have in hand. That is roughly balance to be executed is about 240 crores. Number one. Number two is the pipeline that wherever we are bidding and all that. So more than 6 to 7 bids are already under evaluation at various stages there. And every 2 months, 3 months, there are another, you can say on average every month, 2 to 3 new tenders are there in the market. So with this 240 in hand, we see similar numbers to be, is there up for grabs. But unfortunately, we don't become L1 in all the tenders. Rather, I would say our strike rate is pretty low in terms of being L1. So that is the challenge, because some of the bidders, they come and they give such a ridiculous price that with the safety concerns and all that, so we could not. So we are L2 or L3. So that's the challenge.
But this is because of the price gap only, They have bidded with lower price points of the contract.
Yes. It is only the price. We qualify. We are much appreciated. The customers want us. Some I can tell you, customer really wants that we should bid, but they will say that bid lowest possible and all that. But you see, the services come with a cost, so that's not possible. So that is our been a challenge here about the costing. About the not being L1. But there are enough orders to be grabbed. Everyone is expanding. All my customers are expanding. This is the best phase that we can be into. IOCL is expanding, BPCL is expanding, HPCL is expanding, Reliance is expanding. You name it, and all of them are expanding. As and when they expand, we just have to ride on them. on their success. They continue to grow. We continue to be with them and serve as and when their warehouse or their terminals are ready.
Okay. Okay. And sir, one last question on the revenue contribution between the government client and private clients, if you could have that number.
So, I will put one of our customer is semi-government like HPCL Mittal Energy Limited. So if I put them into a private, because technically that is a private, then we are roughly about 50-50, 50 private and 50 PSU.
Okay. Okay. Okay, sir.
Yeah.
Thank you. Thank you for the opportunity.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to Ms. Saki Panchiara from Kiran Advisors Private Limited for closing comments.
Thank you everyone for joining the conference call of Repono Limited. If you have any queries, you can write to us at research@careeradvisors.com. Once again, thank you everyone for joining the conference call. Have a good day.
Thank you. Thank you so much.
Thank you. On behalf of Kiran Advisors Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.